Uh, so we're gonna start, I guess we're gonna start doing this every Friday.
Yeah.
So we'll have this same, I'll set it up so we have use the same link every week.
Okay.
So you guys, all the consultants, you guys need to spread this around with your people. They're going to do a short overview, and then we're going to do some Q&A for people. And Stefan, I'll let you take over.
Yeah, what we're hoping to do is just to make the Wednesday more of inviting people, the overview, and not so much having, but this would just be, what to do, typing marketing ideas, how to use everything, what's coming new, that kind of thing, rather than just the initial, we're not intending it to be, people that have never heard of it before.
Right.
All right, so
Perfect.
I'm going to give you, let me just make sure I'm sharing.
Yep.
Okay. Can you see my
Yes,
landing
sir.
page?
Yep.
All right. So just kind of just a quick overview. So what this is IRS Section 45B. It was created in 1993 to encourage employees to report their tips. Back in the day, it was estimated that somewhere around 15% of all tips ever got reported. So this program's been around since then to encourage employees to report their tips. And the best way to encourage employees to report their tips is give a benefit to the employer to put systems in place to encourage the employees to report the tips. It's completely separated from the one big beautiful bill in the respect that the one has nothing to do with the other. Remember, you probably heard that they now have a deduction for the first $25,000 of reported tips. This is completely separate from this. It's meaning that the business owner can still get this credit and irregardless of what the employee does on their side. So whether they report the tips and take that $25,000 or not, the one has nothing to do with the other. So this is to encourage the employees to report their tips by giving a benefit to the employer. So you're going to find, and I've said this many, many times on webinars, you're going to find that about 80 to 90% of small businesses have no clue this credit exists. So the median refund for the food and beverage industry is median is $101,000. That's the median, throwing out the lows and throwing out the highs. That's the median. And it's been estimated that by the Federal Reserve Bank of Chicago that $11 billion a year go in credits go unclaimed. And this is a big part of it. So, it's statistically fairly easy to determine how much business owners are missing out on this. You can come up with an average per business, and then knowing that 80 to 90% of businesses are not even aware of this, that you can do some math and figure out that this is a big part of that $11 billion. So the next question usually is, I mean, reps are saying, how does this happen? How is it that nobody's reporting this? And the only thing I can figure out is it's a lot of finger pointing, where a lot of business owners think the payroll service is taking care of this, and they're not. And the reason they're not is because they view it as a liability to reduce the FICA taxes. That it's much easier for them to calculate, do the math on all the income considered all 100% subject to FICA taxes and report those FICA taxes and tell the employer, hey, it's your responsibility to go after this if they even know about it. I mean, the bigger ones, yes. A lot of the smaller payroll services don't even know anything about this, and they're not even, telling their business owners that they should pursue this. But the payroll services view this as it's not our problem. This is the business owner's responsibility. They're supposed to go after this credit. We'll give them the ammo. We'll tell them how much they had in tips, but we're not going to pursue this for them. Well, then the next line of defense is usually their tax professional. A high percentage of them don't even know anything about this, or uh, or they just have no time to pursue this. So this isn't quite as time consuming as ERTC was, but it's similar in the things we have to gather and verify and report and document. So it's way too time consuming for a tax professional in tax season to try to come up with the numbers to be able to reduce and obtain this credit. So that's usually the two players. And like I said, it's a lot of finger pointing. The tax professionals pointing at the payroll service, thinking they're doing this. The payroll service is pointing at the tax professional, thinking they're taking care of this, and no one's taking care of this. So like I said, bear me out. You're going to find that about 80 to 90% of businesses are going to say, I've never even heard of this. I didn't even know I could do that. Now, for the food and beverage industry, we can go 3 years back. So the current year plus 3 years back. So that's the biggest target. As part of the one big beautiful bill, we also brought in this year the beauty and personal care industry. And I'll talk a little bit about what each one of these is. So we brought that in as of 1/1 of 2025. So businesses in the beauty and personal care industry can also take advantage of this, but just for this year. Next year, they'll be able to do 2 years. The following year, they'll be able to do three. The following year, they'll be able to do four, just like the food beverage industry. So we can, if we have a situation where the roadblock is the CPA not providing the information, we can do a quiet opinion. So we can ask the client for the information, give them a quiet opinion on whether they missed this or not, and then they can make a decision about what they want to do. So what's happening a lot of times is, if we tell them, hey, you missed a couple $100,000, they're completely disillusioned by their tax professional. How could you have missed $200,000? I didn't even know anything about this. What else don't you know about? So, it's creating that situation. So don't be surprised that they're completely disillusioned because that their professional has no idea this exists. So a couple of things that have to be that are important. One is it has to be an employee, cannot be an independent contractor, and the FICA tips have to be reported. Like, for example, if the business owner is not reporting the FICA tips or reporting the FICA taxes at all, well, there's no money in the system to go after. So those are absolute requirements. So they have to be an employee, and those FICA taxes have to be reported.
Stefan, how often does that happen that they're not reporting the FICA?
Not a lot. I
Okay,
mean, first of all, a business owner typically is not even going to pursue this because they know whether they're paying the FICA taxes or not.
right.
So they're not gonna want to rock the boat and pursue something that they know they don't have the money in the system.
Yeah.
So yeah, no. I've had a conversation with a business owner where they say, you're telling me I can get $28,000 back, but I owe the IRS 30,000. What's going to happen? Well, they're going to take your $28,000. But that also means that no one's getting paid. So if we're going to pursue this for you, you've got to come out of pocket, which is the reason for this section on the landing page. So I'll come back to that later. So this is how it works. This is the process, simple application, process to claim, tracking. But this is the section where this is the reason why I created this section on the landing page. So if it's a full refund, we're getting money back and all, throughout the 4 years, no problem, no money out of pocket. If we can only recapture part of it immediately, but you've got to carry forward, that means we still did the job. And this is a situation, let's say in total we can get $200,000 back for the client, but they only have in liabilities 150,000. Well, we're going to be able to get them $150,000 back, and we're going to have a carry forward of 50,000. We still did the job to find them $200,000 in credits, but we're not going to get paid on 50,000 of it, which means if they want us to pursue the entire $200,000, they're going to have to come out of pocket for the other part because we're not getting paid because it's not an immediate recovery. Which brings me to the next one. Let's say we create we create $200,000 in credits, but in the 4 year period of time, they have no tax liability. Maybe their professionals done a really good job in keeping their taxes down at zero. There's no money to go after, but we still did the work. We still did the job. We still created $200,000, and it's a huge planning opportunity. So meaning in the next year, they can create an income that's going to generate $200,000 in taxes and never pay a dime in taxes. So in that scenario, we still did the work and we're expecting to get paid. So if you want us to pursue the $200,000, you're gonna have to come out of pocket, or we'll offer you financing, and then in the following year you can pay off that financed amount when you get the actual benefit back. But we're expecting to get paid, so we're expecting to get paid, and that's the way you're going to get paid. So we've already built that into our scenarios. So if there's no money right, in the business owner's pocket, we need to talk about the contingencies and how that's going to get paid, because we need to get paid for doing the work. So let me go back up here and discuss what the food and beverage industry is. And when Congress created this, they were much more liberal in their definition of what food and beverage is. So sorry. When they created the beauty and personal care industry, they were much more specific on what they considered the beauty and personal care. So what the food and beverage is, so we've got full-time, full-service restaurants, bars and nightclubs, hotels and resorts, catering companies, coffee shops and cafes, and then what I call other qualifying businesses like cruise ships, casino restaurants, food and beverage delivery services. Again, this isn't the Grubhub where they're independent contractors. And it doesn't work with independent contractors. They have to be an employee. But there are services out there. They're not as prevalent as, the Grubhubs where they're employees instead. But so it has to be, if it's a food and beverage delivery service and they're being paid as employees and receiving tips, great, it works. So,
Stefan,
mhm,
just a quick question on the deliveries. So like Walmart and Kroger and some of these guys are delivering groceries now,
mhm,
and their drivers all get tips.
mhm.
Would that qualify?
If they're being paid as employees, it
They,
would,
they are
because
being paid as employees.
yeah, so but we're gonna so yeah, so they'd have to provide us, just those people. So they're gonna have a large payroll, but they're
Right.
gonna have to tell us, of those people, you're gonna have to break down the people that are delivery people, and
Okay.
specifically delivering, so it
But
gets a
this
little
is,
problematic if they're
yeah, this is
delivering
groceries. So
other
I didn't know if,
goods.
yeah,
Yeah, so we'd have to break it down to here's the people that are just delivering groceries compared to the people delivering other products.
yeah, I see what you're saying.
You know what I'm saying? So
Okay.
that gets a little, I mean, they may deliver a box
Well,
of
and it
whatever.
may, and it may be too, it may be too cumbersome to go after, but I just,
Yeah,
there
yeah,
are
because
some smaller grocers that are doing the delivery deal to keep up with the big
yeah,
boys.
they
So,
are, because they are grocers and
yeah,
they can probably tell you which of their employees are dedicated to just that
yeah,
service alone. And they'd have to tell us, all the rest of
yeah,
the people that are running registers and all the other people that are working.
right.
And then you're going to have to break it down for the people that are just delivering food.
Yeah. So those of you that are in bigger, bigger markets, with, independent grocers, those would be good ones for you to talk to.
Yeah, I mean,
So,
I wouldn't be the first thing that I would focus on
no,
because it's problematic. I would focus, as far as food and beverage industry, focus on the high-end restaurants first.
yeah,
The steak restaurants, the seafood restaurants, the, high-end Italian and other types of, focus on those. You're wanting businesses that have a high employee count, and even more so, their average tips are considerably higher than other types of restaurants.
yeah, okay,
You're not going to want to pursue the Sonics. Even if they have an high employee count, probably not going to. No, I'm not saying
their
stay
tips are
away
pretty
from
low.
Sonic. If they have, you find a business owner, he's got 20 Sonics, you probably on average pick it up, even though they've got a lower tip count.
Yeah,
They're gonna, in total, probably be okay. But that wouldn't be what I'd want to target first.
right. Okay, sorry to interrupt.
Yeah, no problem. So that's what the food and beverage industry is. Like I said, IRS was a little more, or Congress was a little more restrictive when it comes to the beauty and personal care. And remember, this starts on 1/1 of 25. So for all of 25, they're eligible. So they defined it as the hair salons and barbershops, nail salons, the spas, salons, wellness centers, fitness centers, aesthetic and skincare studios, and makeup artists. That's what they defined as the beauty and personal care industry. Again, has to be an employee, can't be, if you're going to the massage places, but they're all independent contractors, that doesn't work. They have to be an employee. And it can't be, let's say you're going to hair care salons. The people that are renting a booth, they're independent contractors. That doesn't work. They have to be an employee. So these are like the minimum requirements. Like I said, the biggest thing is they have to be an employee, and so we have to separate those people. Like for example, in the food and beverage industry, some people do pooling. So in a pooling situation, we have to break it down to those people that typically IRS defines it as Congress defines it as typically receive a tip. So if they're doing tip pooling and they're pooling in the kitchen staff, we have to allocate out the kitchen staff because those people don't typically receive a tip. So in the payroll numbers and the payroll documentation, they're going to have to be able to get to break it out for us so we can eliminate those people that don't normally typically receive a tip. All right, so that's a like super duper overview. This landing page, which is the same landing page that everyone would use. So what we do is we send your client over to this landing page, but we do it with attribution, meaning you use a link to send them here. And when you send them here, we know that's your client. You can see in your back office that somebody you just sent the link to landed on this landing page. And if they fill out this survey, you would see the new lead in your back office because the lead information comes into your back office. Now, the goal of everything, and this landing page was intended to be self-soothing, meaning they should be able to answer all their questions, you know, solve their concerns, anything, is this real? Is it real? The sections. I've tried to come up with every possible frequently asked question that I can think of. I look at other businesses, other competitors, and anytime I get some kind of a new question that comes up, I added it here. So it's intended to be self-soothing and they can answer all their own questions and say, yep, I want to do this. I think this makes sense. You'll notice there's these red boxes everywhere. And if they click any of the red boxes, they're everywhere. They're like literally every page you go to, there's a red box. I made sure that there's a red box on every page. If they just page down, they're going to see a red box on every one of them. If they hit this red box, it takes them to question number one of the survey. That's what we want. We want them to fill out the survey. At the end of the survey, once before they submit it, they're going to get, I take it back, after they submit it, they're going to get a pop-up that's going to give them the opportunity to set an appointment. That's what we want. We want them to set an appointment. Now, what's been working really well is reps are, whatever they're marketing gets them to a phone call. They have a conversation. They briefly describe the program to them, and the reps are going on this landing page using their link and filling it in with the client and adding themselves on as an additional invitee to the appointment. That's what's working the best. So that's the whole goal. The goal of this whole landing page is to get them to fill out this survey and set an appointment. So at the appointment, I ask them some basic questions to make sure they qualify and does it make sense for them. Like I just talked to a gentleman just before this meeting. He's got two different businesses. One is out of business, so just so you know, the fact that the business is no longer in business, it doesn't make any difference. So his business went out of business in 25. And we can still do 23, 24, 25. He just started in 23. So otherwise we'd be able to do 22 as well. It doesn't make any difference. The business doesn't still have to be in existence. We can still pursue those older returns within the refund statute.
And it doesn't matter if they still have their, do they have to have their EIN tied to a bank account still in order to get the funds?
No, well, we're going to have, we want to have a bank account. Okay.
Right.
So when we get ready to deposit, so in most cases, the business is an S corp, right? So in an S corp, there's two returns we have to amend. We have to amend the S corp return, and then it flows through to the
First.
personal return,
Yeah.
and they're most likely going to deposit the money in a personal account anyway.
Okay. So we can
So
do that. That's good.
here's the beautiful part about this program compared to other programs. We're not amending returns paper. And that's really important.
Right.
So on an electronically filed return, we can bifurcate the refund, meaning 75% of the refund goes to the client and 25% goes into our trust account to pay you guys. That's really important. So as part of the agreement that they have in the engagement letter, they're signing an agreement saying you will sign a form 888A to bifurcate the refund. So we get paid when you get paid
Yeah.
and we get paid digitally. So we're not
It comes
chasing
quick.
clients for money on this one.
Yeah.
And I'm sure a lot of you can remember ERTC and you're probably still chasing clients.
Yep.
And same thing with self-employed tax credits. We're chasing clients for money because they got those checks
Yeah.
and there was nothing we could do about it. We had to paper file those returns and there was nothing we could do because you cannot do this on a paper filed return.
Yeah. So are we ready to start taking some questions,
Sure.
Stefan?
Yeah,
You're probably gonna get a bunch of the questions that you've got listed already, but
sure.
one question I know that people have had, and I talked to you about this, is the very first question when it asks them what they made, and some people are thinking, well, why would they have to know what they make? So if you want to
Yep.
explain that to them, and the fact that
Yep.
we're going to get their tax return and know what they made anyway, but
Yeah. So if they're trying to discuss, hide or they don't want to divulge what they made, that is not going to work because we have to amend that. Most likely we're going to have to amend the personal return. If they're a C corp, then a C corp's like a person. We only have to amend the C corp return. That's it. That's all we have to amend. But a high percentage of the businesses are going to be either a partnership or an S corp, and they're going to have to give us those personal returns anyway. So if they're balking at it now, that's a problem. And
yeah,
here's the reason why we have to have that. And that goes back to that scenario where the liability on return, when I say a liability, it's what you paid. Whether you paid, you had to write a check, when the return was done, you still owed money, plus you had some withholdings. How much money is in the system? That's what we can go after.
yeah,
And that's the most we can go after. So again, in a scenario where we can get back $100,000, but on that tax return, their liability on that tax return is $80,000. We can only go after the 80. We can't go after 100. The 20 carries forward into the next year. And then that starts over with 20 in the next year. We add another 100. Now we can go after 120.
yeah,
Well, let's say in that year again, we're at $80,000. Well, we've got a carry forward of $40,000. We can only go after what's in the system. But that's the reason why I asked that question. What was your taxable income in that year? If they say zero, well, that means that, we're going to have a credit, but we've got no place to take it. And we likely have a scenario, a tax, carry forward situation. And we want to know that up front because I want to know that in that initial conversation, hey, is this the situation in all 4 years? Well, yeah, I have no tax liability in all 4 years because I had a large carry forward or whatever. Okay, well, that's a problem because we're going to be able to generate a credit for you, but you're not going to be able to utilize it in those 4 years, which means you're going to have to come out of pocket. We're still providing a benefit. We're still giving you a great planning opportunity, but nobody's getting paid on this. Not from a contingency standpoint, anyway. That's why I asked that question. That is why question number one is taxable income on the last year's personal return.
yeah.
If they say zero, Yeah, I need to
Yeah,
know
it's
at that initial
problematic.
conversation.
Yeah, because they're gonna have to come out of pocket and,
Yep, I need to
yeah,
know that. So that's why I'm asking them
yeah,
on that first conversation, is this the same situation in the whole 4 years? We just discussed we can get you $200,000 back,
yeah,
but you're not going to be able to utilize that if in the whole 4 years you have zero taxable income, you're not going to be able to utilize that. Which
yeah.
means, are you understanding that you're going to have to come out of pocket to make this happen?
We had a couple of people that had, that I don't know if it was the client or them. Maybe they were embarrassed to say how much do you make or whatever. I don't know what it was,
Yeah,
but
I get that.
if there's any pushback on that, I mean you know, uh, Stefan Legacy Tax, they're an accountant. They're going to do
Yeah,
some tax work for
you're
this guy.
you're
They got
gonna
to know that
and
information.
you're
So
gonna
it's
have that. We're gonna
it's
have to
nothing
have that
that's
information
unusual.
sooner.
Yeah, it's
Yeah,
nothing that's unusual.
yeah. It's not something that we're not going to need anyway.
Yeah. Okay. Jerry, you can unmute there.
Thank you.
Yep.
So I talked to a small business owner yesterday. He filled out the survey. We booked the call, which is in about 90 minutes with Stefan.
Yeah.
Um, but I don't see him in my back office. He's not, the lead is not there. And
Hmm.
I sent him the dedicated link, the Black Swan link.
Right.
So I watched him do it.
Did
So
did
Huh.
you did you watch the 7 and the 2 minute videos so you made sure you got the right link? Because there's different links.
yes. Yeah,
Okay.
it's
Okay.
Black Swan something something with my
Yeah.
affiliate ID.
Okay.
That one I can't explain because if you send them the right link and then unless the only other thing I could think of is they came on, they looked at it, and maybe they got off the site and then came
No, I
back.
was with them the whole time. It's the Black
Oh,
Swan
yeah.
IDE IDEV affiliate
Yep.
27-5.
Yep. Yeah. If that should track all the way through. And then when they fill out the survey, when you should receive that contact information in the back office. So we'll probably have
So
to do a little research on figure out
yeah,
why
look
that didn't
into
go
it.
through.
Okay, well maybe
Okay.
we can deal with it on our call or
And
whatever
then that,
later.
and that's also the reason I encourage, the reps to also be, and of course, it's important for you to kind of listen in on a few of those, but
Yes.
Yeah.
it's helpful to have you on that meeting because then when I ask, hey, is it okay if I add your rep onto your portal, then they're like,
Yes.
yeah, yeah, sure, makes
Yeah.
sense.
Yep.
Great. Well, we'll deal with that
Thank you.
later. Just one quick comment. When we both got these we booked the appointment on Calendly. We got the email
Hmm.
on that confirmation. It said there's a Zoom call, but then it also said please call this phone number. So it's a little confusing. Like,
Okay.
is this
It's
a
an
Zoom
either
call
or.
number? You might
Yeah,
want to just
let me
relook
just
at your
yeah, let me look
confirmation
at the wording on that.
Yeah,
just to
it's an
keep
either
it
or,
clean.
Jerry.
What?
It's an either or. They can call in or they can get on the Zoom. Either
Yeah,
Okay,
way.
well, you might
I
want to
give
just
them.
make that clear because I'm a
Yeah, I'm gonna
little,
probably need to change the wording a little bit because it's intended to be a Zoom call, but that other is kind of as a backup. So sometimes people are like, I'm not great about Zoom. I don't have Zoom. I'm not comfortable with Zoom. We can
I
do
hear you.
this on a phone call. That's fine. But you're right. The language needs to be changed a little bit.
Yeah. Thank you, Jerry. Jim.
Yeah, just to clarify once more, um, the top line, I don't know what I did here. I don't know what I did. Oh, here we go. The very top line again, that's either a sole proprietor or an S corp. Is that what you said?
So what I'm asking them is, what's the entity type? Sole proprietor, disregard entity, which likely is a sole proprietorship, but some
Yeah,
people
but
know it as something else. So
the
that's why I
very
have
top
both.
line, do you have to get down to that before you determine what to put on the very top line?
No, so
No, they
it's a
have to put
check.
their income, Jim. It's for everybody.
Oh,
It's it's
here, this
it's
top line,
required.
taxable income.
Of course, it's the owner, or
It,
but is it sole proprietor and S corporation uh, as the
Well, they're
owner?
typically one or the other.
Yeah, that's what I mean. Okay.
But
they're
but
typically one of
everybody
them.
that fills this out has to do it, Jim. It's not
Yeah, I mean,
eliminating anybody if they're a
yeah.
C
So
corp. Just have them fill it in.
I mean,
Okay.
I like a situation I just had before this meeting where he's an S corp, but he's got two separate businesses, but they happen to both be S corps. But it could be one that's a sole proprietorship and another that's an S corp. So you could be both.
Yeah,
But this is more intended to be, just give me, I'm just trying to determine in an initial meeting, does this make sense for you?
yeah,
I mean, we're going to get into the nitty gritty weeds when we get that conversation. Like, this gentleman, I'm going to send him two different invitations to two different businesses because they're two separate S corps and we have to process each one separately.
yeah.
So, it's possible. I mean, choose all that applies. So they may say, sole proprietorship, C corp. Well, I've got one business that's sole proprietorship and another one that's C corp. Okay, we're going to talk about that on an initial meeting.
Yeah.
And
Thank you,
then the
Jim.
annual revenue on the business. So I do this because you tell me $1.5 million here, and then you tell me zero income here. Okay, we got to, either you got a tax professional that's killing it, or we got a problem because you said you made $1.5 million in revenue. I look to see what your expenses are. Let's say it's 1.5 here and it's 500,000 here. There should be $1 million in revenue. I'd love to know how you reduced your taxes and absolved $1 million. So there's a disconnect here.
Yeah. Chris, you've got to unmute.
Can you hear me?
Yeah, can now.
Yeah. So I've been doing this a couple weeks. Had a couple of people I assume did the survey. It showed up in my back office as a
Hmm.
lead. And then when I followed up with Stefan via email, I think he had said he didn't see it or didn't know what I was talking about. And I didn't know if there was an overlap between what's in the back office versus what they have. But the merchant, I don't think got any type of confirmation or a calendar
Well,
link.
so if they set an appointment, so the only way I can see that happening is they get through the survey, they submit it, and then they don't set up an appointment. So the
Okay. So they have
appointment
to set up
is,
an appointment after the.
yeah, so that what
Oh, okay.
happens is they get through the survey, they submit the appointment, and then a window pops up to give them the opportunity to set up an appointment.
Oh,
They
okay.
can bail out at that point, and we've got to build into our systems that if nobody, if we don't see an appointment, we're going to have to follow up with them
Oh,
saying,
I
hey,
got you.
we noticed you filled out a survey, but you
Yeah.
never set up an appointment. That
Yeah.
again is why I encourage reps to do this with your client.
Yes. Now that's what I was going to say. Your best bet
Yeah,
is just to say,
yeah.
hey, listen, you got some time. Let's just do this right
Yeah,
now and
let's
then
just
do
do
the
this right
appointment.
now and let's get through the whole process,
Yeah.
submit,
Yeah.
and let's set up an appointment on the
Uh,
calendar.
right. Okay. Okay. That
Thank,
makes sense.
Yeah, because
thank you,
that's when I'm
Chris.
going to ask them the questions. And immediately off of that appointment, I'm going to set up the Canopy account for each individual. And I try to, if I've got the time in the meeting, I try to right there on the spot, get them to accept the portal invitation. Because that seems to be the biggest hurdle is get them to accept the portal invitation. Go and look in your junk, find the invitation, get it set up a username and password. Okay, now it's live. Now you see the request for information. We're good to go. And now it's kind of on the client at
Okay.
that point. But I also ask them, is it okay to put the rep on there? And if they say yes, then I immediately will put the rep on there as well. Now you see what they see.
Right.
So now
And
you
now
can
one more
follow
thing
it
too.
along. So that saves that whole question about where we at on this client. Well, you can go in the portal and look for yourself. That
Yeah, I
they've
know.
got, we'll set up. The first thing we do is we send them we'll send them the whole process, all 8 steps.
Right.
And they can start to upload stuff off of that alone if they want to. But
Right. Right.
step number one is the key. So step number one is fill out the initial survey. So there's a difference between some people think this is this initial survey. It's the survey for the landing page, but it's not the initial survey. So the initial survey gives us who are the business owners? Do they have any employees that are related to them? It's going to ask the name of the business, the address of the business, all the important things that we need to know. And we create an engagement letter off of that. And then we also break out all the rest of the steps
Hmm.
for tracking purposes.
Yeah, no, I
Did
get
us,
it.
did they get us the tax returns? Did they get us, this form? Did they get it? It's individual steps that still remain. So what usually happens is if they fill out the survey, that solves step number one. We create an engagement letter. That's now it's a separate invitation to sign because it's a digital signature. So it sends them an invite to complete and sign the engagement letter. They go through, they initial on every page, they sign at the end and date it. That's done. It comes back automatically. When they submit, it comes back automatically. That solves step number two. So when we send them the steps, we typically start at step number three.
Perfect. Anybody else have a question? Man, that's too easy. Oh,
So like I
James?
said, we have the steps in there for tracking purposes. So what happens is when a client, this happens quite a lot, clients will go in there and read it and then they don't do anything with it. And what it does is it goes into review, and then we have to go back and push it back to the client. And while it's in review, it's not bugging them. So when we push it back to the client, now it's bugging them again every 3 days. So if a client's telling you, I don't know what I need to do, oh, yes, you do, because it's bugging you every 3 days.
Yeah. And those forms are all in, once they've logged set up their account in the portal. That's when they're going to start getting that stuff, right?
Yeah. Yeah.
Yeah.
So well, they'll still get an email, like a client will get an email to review the entire 8 steps, even though they haven't logged into the portal yet. So they're going to have 2 emails. They're going to have one to initiate and set up the portal account, which is nothing more than setting up a username and password. Once then it's set up live, and we encourage them to, build yourself a little favorite, put it on your desktop, so that you can easily log back in again.
Chris, you had
And
another
then,
question?
Yeah, so getting back to the other, as far as getting all the documents and stuff, I was told that a lot of, I mean, most of the stuff, I don't know if they have it electronically or paper. I would imagine most of it's electronically. Once the process starts, I mean, I was told that it's very difficult for them to actually get them all the documents and to follow through with a lot of this stuff. Is that true?
it's like anything else. The hardest part is getting everything we need to do the work, just like it
Mhm.
was for ERTC. We're typically not going to start amending a return until we feel like we have 90% of what we asked for. If the
Right.
process is somewhat similar to ERTC, we need 941s. We need the 941s to verify, did they already take this credit?
Yeah.
Yeah, and the other
We
thing I
need the
had,
tax returns. Did you already take this credit?
yeah,
And we need them for amendment purposes. So there's
right.
certain things we have to have to move forward.
And I
One of
had,
the,
go ahead.
so one of the confusing one is this Form 8027. This one, a lot of them are saying, I don't know, I haven't filed this. Well, it's a requirement for any employer who has more than 10 tipped employees on any day of the year. A lot of them are not filing this form. They're supposed to. They can get penalized for it. And, all they have to do is just say, I've never filed this form. And my response back is going to be, you are indicating you have more than 10 employees. Are you aware that you have to file this form and you can be penalized for not doing it?
Yeah.
Yeah.
So you should probably file this form from now on.
Yeah.
All
So,
right.
Chris, you can also, when you're working with the owner, the issue usually is when you leave the meeting or whatever, they're on to other things on top of their mind. So ask them if they've got a right-hand person or someone that you can work through and stay in touch with that can get the information that's needed.
Yeah, typically
Right.
they're CPA,
Yeah, yeah.
Well,
So
CPA or whoever. I mean,
a
it
bookkeeper. Yeah.
could be their
one
general
thing I
manager.
will, just like ERT, so one thing I will encourage you to and understand about CPAs. CPA is probably one of the people that missed this. So they're also more likely, they're going to either go one way or the other. They're going to say, wow, I didn't even know anything about this. Let's get on top of this. So let's get your money back. Or they're going to say, I don't know anything about this, so it can't be real. It's got to be a scam.
Yeah.
So it'll go one way or the other. So
They did that with
don't
ERC
always
too.
depend on the CPA to be helpful in this regard because sometimes they've got egg on their face. Hey, we do the math and go, we think we can get you $200,000 back if you get these documents to us. that professional's got some serious egg on their face
Yeah.
because they didn't know
And
anything
you're going to
about
run
it.
into some that the CPA is going to all of a sudden be the hero and say, I could do this for you for less or whatever.
Yep.
And
That too.
we had that happen with ERC and the people,
Yep. That
um, we had one guy, he got $18,000 because he went through a CPA. CPA charged him 11,000
Yep.
and, uh, told him he didn't qualify for, 2021 at all. We got him $750,000 back. He could have had more in 2020, but he went, the smart route with his own CPA. So
Right.
this could be the same type of deal as that if they don't know what the heck they're doing. And
Right.
so make sure you guys address that with your client. If they say something about their CPA, just say, well, your CPA in this situation is like your family doctor. He is not the brain surgeon. If you got a tumor in your brain, you need this guy to do it for
Yep.
you because he's
Yep.
been
Yep.
doing this for 23
And my
years.
my response usually to that is, couldn't I just have my CPA do this? Well, yes, you could, but if your CPA knew anything about this, they would have done it
He'd
already.
be doing it. Yeah.
Yeah, if they know how to do this, they would have already done it for. Think about it. We found you $200,000. Wouldn't they be the hero if they found that for you?
You would think.
So, if they knew about this and how to do this, they would have done it for you already.
Yeah. Jeremy, you can unmute yourself. I don't know
Yeah,
if you
no,
knew that.
I was just going to say exactly what you said about their CPA is the doctor
Okay.
and we're the specialist.
Yeah.
Okay.
Yeah.
You took the words right out of my mouth.
And
Thank you.
here's the other thing. So I'm going to address this question here. You understand that, we're at 25%. Some of our competitors are at 20%. Why are we 5% higher? One, because of a long history of tax credits. We know what we're doing. We've done ERTC, we've done WOTC, we've done cost seg. There's a lot of credits that we pursue and we're good at it. That's why you're paying us more. Like your situation where we did this during ERTC, where so and so did this, they only got 1 year, and we went back and got them, $300,000-$400,000 more, and even went back and amended the returns that were amended, and they left money on the table. That's why you're paying us 5% more because we know what the heck we're doing.
Yeah. That
Now
extra,
go
it's
with the
just like,
professional. Don't go with somebody that missed this in the first place.
it's just like anything else. You can go get a hotel room for 20 bucks at Motel 6.
Yeah, but is that the place you really want to stay? Yeah,
No. Yeah. So, if you want the nicer and the better operation, you're going to go to,
yeah, yeah,
the Hyatt or wherever. I mean, it's just that's the difference. And you
right.
have to help your people understand that because you will get some that think, well, I'm going to save a little money
Yeah.
and they're going to cost themselves a lot of money is usually what happens.
And I'm gonna give you a little heads up on what's coming our way. So understand that once this is done, this is not the last thing we're going to pursue. There are other credit programs and other state credit programs that these business owners likely qualify for. So
And they've
this
never
isn't the
been told
last
about it.
thing that we're going to pursue with that client. So this
Yeah.
is just the first step. It's the way in the door. But then we're going to do an analysis and say, hey, here's some other things tax planning wise. I mean, this is some things that are going on in the background that you're not aware of yet. I mean, we're going to want to pursue, is the client below $600,000 in gross income? Are they above $600,000? We can, within, reasonable certainty, determine what likely other opportunities are available for them.
Yeah.
Below $600,000, we're probably going to find other tax planning opportunities for you that you probably missed. Above 600,000, we're probably going to find some higher end tax credit programs or other things that you probably missed from a tax planning standpoint. We can go after that as well. Or, other credit programs, or certain restaurant industries or certain restaurant businesses likely are candidates for the work opportunity tax credit or for other state tax credits. So, we're working on
Yeah.
a site right now that's going to do an analysis of 13,500 credits and
Wow.
tell them that these are the other opportunities for grants, for state credits, for the typical type of credits that you are likely eligible for. So this is only step number one of finding money for you.
And Stefan, once you have that client in your fold, who gets paid when they get these extra services?
You do.
There you go, guys.
You do.
You know,
They're going to have various levels of payout because some of the programs have a lot more manual process behind
right,
them, and we just don't have the opportunity to pay out 25%. Others
right.
will be at 25%.
Yeah. No,
So,
that's awesome.
certain types of credits like R&D, it's manually intensive.
Yeah. Yeah, which I just wanted people to understand because I knew that was going to come up. Well, if
Yeah.
you get this other deal, am I still going to
No,
get paid?
no, this
Yes.
is
It's
by
your
far
client.
not the only thing we're going to want to
Yeah.
pursue with these clients. We've got other things, Section 125, group health. There's other things you can pursue. This is the way in the door. This is
Yeah.
a really nice way in the door. And typically, after this, the client's going to you and saying, "What else you got?
Yeah,
This
exactly
is
right.
great. You got $200,000 back from me. What else you got?"
Stan, I still have people that if I run into that I did ERC with that will ask me that exact question. Hey,
Yeah.
have you guys come up with any other program you can get me
Yes,
another check?
absolutely.
I'm ready
Like
for one.
I'm
So
happy with what you did with me for
yeah.
ERTC. This is a nice segue to ERTC because if you've got a book of clients that you did ERTC with, yeah, attack
Go
them
on
first.
in. Yeah.
Absolutely.
Yeah, exactly
Especially
right.
if they're a restaurant or they're in the beauty and personal care industry. Yeah, go after them first because they understand getting money back was, a savior back when they
Yep.
needed it.
Yep.
Here's the next thing that's going to get you some money back. And
Yep.
why?
Steve.
Just like ERTC, probably because your tax professional didn't know about it. That's probably why.
Yep. That's exactly what happened. Steve, go ahead.
Yes, Stefan, I was just curious. Can you tell us what the client fees are for R&D and what the commission
We
percentage would be?
Steve, we don't want to get started on all that right now.
Okay,
We can get that to you later, but this is just for FICA. I don't
sure.
want to get people sidetracked.
I got it.
And
Appreciate it.
Stefan, I don't know if you care or not, but I would just rather keep everybody
No, I agree. Let's
focused.
focus on what this
Yeah.
meeting is about. We can talk
Okay.
about that.
Yeah, we can get that information for you. As a matter of fact, there's probably somewhere there's a support or a ticket on in the back office in there where they can ask those kind of questions and get an answer.
Yeah, so you can reach out to us. I'll
Yeah.
I'll put up in the chat in my email address, but yes, we can talk about the
Yeah.
specifics and what we can do for R&D and other credit programs. You're seeing already, if you look in the back office, when you go to create a link, you notice there's a pull down. So like you've got to go in the second one down because cost seg is up first. Well, that tells you cost seg is coming. It also tells you that R&D is coming, and then lots of other, we're kind of cluing you into what's coming, but we're
Yeah.
not going to roll those out until they're ready.
Okay, so Denise, just in the chat, she says, "Do we get an email notification?" Denise, that's why you get yourself on the put on the portal with the client. You can look in there and see everything that they've completed
Yeah,
and what
literally
they
like
haven't
like
completed.
what you're seeing on my screen is a client and you would see what they see. So literally what
Yeah.
you see, what they see on the screen is exactly what they see on the screen. So if you're wondering what's not been done here, all these steps have not been done. So you don't have to guess at what. So what happens is if a client reads it but doesn't answer it, it will go to under review, which means, hey, now we have to go back in there and look. Did the client send us anything? No, they didn't. We put it right back to the client again.
Yeah. So yeah, so that's why you want to be on that with the
Yeah,
portal.
that's
That way,
why it's really
because
important.
you don't
And
have
that's
to call Stefan or Stan or anybody.
yeah,
You can
yeah.
look in
We
there,
yeah, we
keep
don't
up.
helping us avoid all those phone calls. What's going on with my client? Well,
Yeah,
are
you
you
don't
on
want
the
to.
portal? Well,
We
go
don't
check
want
it
them
out.
spending their time doing that.
Yeah.
We want them making us some money. So
Yep.
they can't do that on the phone talking
Yeah,
to
and
you
just
guys.
understand that, the longer it takes them to get us everything we need, the longer it's going to take for you to get
Yeah,
paid.
yeah. So you got to stay in touch with your people. Jim, you got one more thing?
Yeah, Stefan, a few minutes ago, you said something about finding out which employees might be family, and we were talking about ERC. one of my ERC customers had 75 servers,
Mhm.
and only 8 of them were non-family. So I want to clarify once again, does this exclude family or is this including?
The same rules apply that they did to ERTC. So other family members, if they're directly related, and there's a definition of directly related, and that's why the survey is important. If they're directly related, they're excluded,
Okay,
just
thank you.
like ERTC was. That's a
It
standard. That's a standard on any credit programs that Congress creates a credit program. They piggyback off of other credit programs.
is a second cousin immediate family?
Second would no, it would not be.
Okay. So, first cousins, no, no go, but if they're further out than
Right.
that, then as
Yeah.
long as it's they could be first cousins with another employee, but as long as they're not first cousins with the owner, we're good.
Right. Yeah. So that's
So,
why we asked that question. We asked them literally to give us information on any employees that are related. And we
yeah, so
asked
out of those
how they're
75,
related.
Jim, they got to have some people that are,
Yeah. Yeah.
probably not directly related,
Yeah. That's why we asked them
unless they got
specifically, how are
60
they
kids and
related
70.
and how are they related?
Yeah.
We
Roger.
want to know that up front. So I want to have that
Oh,
conversation just like that. That's a conversation to have. You've got 75 employees that are tipped employees, but only 8 of those are not related to you.
yeah, that would be that's a scenario I would be surprised if that's actually.
Yeah,
I
I
mean,
would
they'd
think
have
that's
to
a
have all their
high.
grandkids working for them and everything else for that to
Yeah,
happen.
I would think
I'd
that's
be
a
surprised.
high number to
Yeah,
have as direct related.
yeah. Roger, can't hear
Roger, you're
you.
muted.
It says he's unmuted.
Oh yeah, okay. We can't hear you, Roger.
Roger, I don't know what to tell you. You may have to leave and come back in.
Scotty has a quick question, and if you don't mind me unmuting him while we're getting Roger sorted.
Where's Scotty? I mean, he can't
I'm
raise his hand.
he put it and I'm here we go. I think he's
Uh, Let
I
me see if I
tried
can
to.
find.
I'm clicking on asked.
Just a second. I'll find him.
Okay.
Scotty asked oh,
Yeah, there. Sorry, I
I
don't
just
even know where to
unmuted the
find.
wrong guy.
Yeah, I didn't know where to find to raise the hand. Sorry, I'm not on these a lot. I am when I am. Sorry. Quick question, okay? So you can hear me?
Yeah.
Yep.
All right, Stefan, the question is, like how you have the maximum on the calculator of like 725.
Mhm.
So, we all have been there. I've been to like down here in Charlotte. You get some real busy coffee shops, sandwich shops. You go up in line, get your stuff, but jamming. But I'm assuming these people are on probably like minimum wage, 14, 15, 16 bucks an hour. So would they qualify, or is it a whole different ball field because they're not, tipped, hosts, waiters, waitresses. So how does that work?
So all we have to do is exceed 5.15 an hour for them to get the full credit. Okay. So understand the minimum wage rate for this program was set in 2007. All we have to exceed is 5.15 an hour, regardless of what the state minimum wage rate is. That's irrelevant. And there's a lot of bad information out there about 7.25 an hour. Yeah, it's 7.25 an hour for the beauty and personal care industry, but it's 5.50 an hour, 5.15, 5.15 for the food and beverage industry. And that was set in 2007 when when the one big beautiful bill brought in beauty and personal care, it set that rate at 7.25. Again, there's a bunch of bad information about there. I've
Yeah.
seen information where it says that the state wage rate is 17 bucks an hour. We have to, no, that is wrong.
Yep. So if they're getting 213 an hour, then the only thing that has to happen is some of the tip money,
That's
tip
exactly
return is
right. Now
going to go towards
watch what
bringing them up.
happens. So I'm
Yeah.
going to leave everything else and I'm going to take this to 213. You see my screen?
Yep.
Okay, so I reduced it to 213, which 213 is the minimum they can pay based on federal wage rates. That's the minimum they can pay. So if it's 213, which means now we have to give up some of the credit because we've got to get them to 5.15 an hour to get the full credit. So they had to give up some. So
Yeah.
let's say we go $4. You can watch it change. Well, $4. Okay. So now let's go to 515. They're going to get the full credit.
Yep.
And then
Yep.
what happens after 515 an hour? They say, well, some of my employees are only working, 10 hours a week. It doesn't make any difference how many hours a week they work. At
The tips
515 an
matter.
hour, it makes absolutely no difference how many hours they work.
Yeah. The tips is what matter.
Yep. Then
Yeah.
once you get to 515 an hour, all you care about is the number of employees and how much they're getting paid in tips per week.
Yeah.
How many hours of work? They can work 5 hours a week. Doesn't make any difference.
Yeah. Roger, man, Roger,
And that's weird because
yeah,
Roger has like 3, 4 appointments a day, so his
cannot
stuff
hear you,
always
Roger.
works.
I don't know what's going on. I wish I knew how to fix it, Roger, but I don't. I mean, it says you're unmuted. Let's see. I don't see. Did you leave and then come back? You have to, you talking, but I can't hear you. But if you leave and come back and you put allow audio, maybe there is a deal you got to click before you enter. It says allow audio. Maybe that's where if you want to try that, we can come back to you when you come in. Um, Gina, you can unmute. Hello, Gina.
I
Okay,
wonder if
Bill.
it's something to do with the Zoom instead, because I've had many of
Well,
webinars with Gina, and she's
yeah,
always
she has to click on, well, now she did. Okay, go ahead,
Okay.
Gina.
Yeah, no, it was a process to get it to unmute for some reason.
You just have to click on the deal that pops up there, I think.
Yeah, well, I was doing everything that I'm familiar with, but for some reason today it was special. Anyway,
maybe
question,
Zoom's having a problem.
yeah, every now and then there's glitches. It's technology.
Yeah.
It's not perfect. Anyway, the question I have falls into the area where it says leads generated. So when you're on, the site and it says leads generated and you can see where you have a lead and you view the lead details. Okay, so then you open that up and you're viewing the lead details. What does all of that mean? Because I can view where I have a lead and there's
What
some
that's doing
details.
is it's getting the information from this landing page or from this survey.
Okay.
So one of the things that the site doesn't do is it doesn't give the company name, and it's the reason why we're building our own affiliate site, because we don't have any control over what comes in. So this comes in through a software. It's a third-party software called Gravity Forms. So Gravity Forms works that I decide, and it brings in this information. For whatever reason, it doesn't bring company name in, and it's an I decide thing, and we don't have a voice to get them to change it. So that's why we're building our own, to have a lot more control over what we do and how we do it and what we see and all the tools available. But that's what that is. It's taking the information from this and it's putting it into your back office, so you know. But you will see you will see the business owner's email. So there's information there for you, but then there's
Yeah,
some things that are missing. And
right. For instance, it's showing me this one business and it does give the company name, the restaurant name.
right.
And I've had conversations with this guy. I'm waiting.
Yeah, just so make sure. So, like I said, there's a disconnect because when they fill this survey out, they get a pop-up. And that's why I also
Mhm.
encourage reps, have your system, your marketing Smith system, have them reaching out to you. Then you can jump on here with your link and go through the survey with them. And then after that, make sure you set up an appointment, because if they come in here themselves, fill out the survey and submit it, and then don't set up an appointment, there's a disconnect.
Yeah.
Right. Okay, great.
Thank you, Gina. Bill
Yes, sir.
Harris.
Can you hear me?
Yes, sir.
Yeah, my background is in medical clinics only. I don't have any contacts with restaurants, or the only place I go to is where I get my pedicure done once a month. What's the best way to reach out and get in touch with the right people to talk to? Second question is this new legislation on no tax on tips. How does that affect the program?
It is completely independent. So the new legislation that came with one big bill to give them a deduction for the first 25,000 of tips is completely independent of this. So a business owner can get the FICA tips tax credit back, whether or not the business or the employee takes that deduction. One has nothing to do with the other. The only thing that's really so the one big beautiful bill brought in all the beauty and personal care, but it brought in also the deduction, but those two are completely independent. So one doesn't have anything to do with the other. So whether they're taking that deduction is irrelevant to the fact that the business owner can still take the credit.
Because the business owner's probably still paying FICA on that, right?
Yeah,
Is that,
yeah. Whether they're reporting whether they're taking the
yeah,
deduction on the personal return or not, one is independent of the other.
yeah. Okay, Roger, let's try one more time.
Well, he came off mute.
Man, Roger, I don't know what's going on.
Yeah, that's
Sorry.
unusual. I said I have
Yeah,
two,
sorry.
three or four meetings a day with he and his people.
Roger, maybe can you type your question in the chat? Maybe I guess that's the only thing I can recommend since we can't get you on here. Yogi, I hope I said that right.
Yeah, it's hard to mess up Yogi.
Well, it's been a long time since I watched Yogi and Boo Boo, so I don't remember how he spelled it. So
The whole process starts with the client filling out the survey on the landing page.
Correct.
How do I get my landing page?
So in the back office, so if you've already signed up in the back office, you have a link. I'll show where it's at. So I'm on my version of the affiliate site. So marketing materials, and then you're going to go to email links. And then here you're going to use the pull down because the first thing up is cost seg. So if you want to get the FICA tips, you're going to go here, display email links. Now you're going to see two different versions of it. You want the ASCII text version. You're going to copy this and you're going to use this in your marketing. So when you send somebody to this link right there, they will go to the landing page, but they'll go there with attribution, meaning we know your person landed on that landing page. And if they fill out the survey, we'll know it and you'll get that lead in your back office.
I don't have that link to get to the
Did,
back office.
did you sign up with
Yes.
somebody?
Yes, sir.
How many days ago?
2 now.
Okay.
What's the name? Oh, it's a Yogi. Okay, that's easy enough to look
There's
up.
not going to be a ton of yogis back in there.
We've only got 3.
Mhm.
Maybe not.
Nope,
Did
don't see you.
Can
You know
can
what the
you
username was?
Yeah. Yogi at
Yeah, I don't see you. I would suggest that whoever you're under resend you their link. Matter of fact, if we have the people on now, we can do that right now. So whoever sent you the original link, then you'll come on there, you'll fill in some basic information, and then we'll approve it, but I don't even see you as a pending.
I'm under Denise.
Okay.
Yeah, so you need to get the link from Denise again then. And Denise, hopefully you saw where Stefan just showed you where to get your link. And I don't know if maybe a different link was sent or something, but that
100.
Denise Lovelace. All right, Yogi, is that everything for you?
Yes, sir.
Okay, thank you. We'll get you figured out somehow. Um,
Ooh.
Denise, I'm going to, I found you here. I'm going to unmute you. You said you couldn't raise your hand or something. So
Ah,
there you go.
hey, technology. Yeah, so no, I know I sent him the link to sign up, and then I sent him the other PDF, the contract. So yeah, and I don't know where to find him.
The contract.
Really
The
weird because okay, that you don't, yeah, I don't see anybody. I'm looking in the managing tiers, so it means right now you don't have anybody under you.
tier recruit. Yeah, I'm looking at the tier recruiting. I'm
Yeah,
not opening.
I don't see anybody under you right now.
Yep. So you need to copy and paste your tier recruiting link. I've actually had to do this for somebody on the spot. I figured out how to do it. I log in as them, and then I'll go to the tier recruiting link in the system. I'll copy and paste it, and then I'll send it over to the person that said they never get signed up. So we
Yeah,
could
so
actually do it right now if you want
yeah,
to.
so here's where you find your tier recruiting link. It's under tier recruiting.
Yeah, I've
And then
got that.
yeah, this link right here. This is what you
Email
want to set up.
links.
So, but make sure that
Yeah.
you send them, don't use this HTML one. Use this link here.
Yeah, that's what I sent him.
Yeah, then he'll get it, he'll fill in his contact information and it'll automatically put him under you.
And I'll send it to him again right now.
Yeah, send it to him, and then he'll get an email later today or tomorrow that says you're approved, and here's access to your back office, and he'll be able to go in there and log into all this. He'll be able to operate with his own back office. And I recommend have your new people watch that 2 and 7 minute video that is it Sterling?
Sheldon.
Sheldon, yeah.
Sheldon. Well, I was close. I had an S in there.
Yeah.
So yeah, have them watch those because it's going to tell them how to find everything and navigate that back
Yeah,
office.
so as part of the welcome email are the links to the training.
Yeah.
All right, I'll
So
review
yeah,
those as well.
yeah, it's real important for them to look at that. So so they don't have to keep asking somebody, hey, where do I find this or whatever. Those videos explain all that.
I just
All
put
right.
the two videos in the chat, the 2 minute and the 7 minute. They're very
Denise,
helpful.
was that everything for you?
Let's see. I gotta go back and see what else I was double checking on.
Okay.
Like,
Can you don't know how to raise your hand?
yeah, I do.
If you find what you want to do, raise your hand and I'll call on you again. I'm going to go ahead and go to the next person if that's all
Roger's
right.
question is in the chat.
Who?
There's Roger. I
Oh,
believe.
Roger Tools. Yeah.
Yeah. Does the credit only apply to 2025 for personal CRE business? Because the chat GPT said it would go back to 2022, which I believe it does.
Bad information. So for beauty and personal care came in on 1/1 of 25. So they're only eligible for 25. So lots of bad information out there. So the food and beverage industry goes back to 22. Well, actually it goes back all the way to 93, but we can only go back to 22.
Yeah.
As far as because that's the statute of limitations on amending. But the beauty and personal care is only for the year 25. They cannot go back.
Yeah. For those of you that use the AI stuff, AI only can, put together what it's finding from other people. So when there's false information
Right.
out there, AI mixes it right in. So
Yeah, I understand how AI works.
Yeah.
It's just searching the internet for what's out there. And if somebody puts some bad information out there, it's gonna,
yeah, then you're going to have bad information. And so it's not the be all, know all every time. Chris Casey.
Yeah. Another couple points here. One, I want to get back to the minimum wage question for states that have higher minimum wage, like most West Coast states. The other question was, I had one guy said something about he got some personal FICA back, but he didn't know it said he got it back in 2022. He didn't know if personal is separate than business. And then the other question was how long it takes for them to get their money.
All right, so let me answer that question. So if he's telling you that he got back the FICA personally, so understand like in an S corporation, we would start by amending the S corp return and we flow through the credit to the personal return. So if he got back credit in 22, it's possible that he's already taken care of this for 22, but you'd still want to probably pursue, he may have. So understand that there might have been somebody reaching out to him to go back multiple years. They might have contacted him in 23 or 24 and said, hey, you probably missed this FICA tax. And they went and pursued 22, and then he dropped the ball on 23, 24, 25. Because, just like this, we go back, we do 25, 23, 24, 22. The client has to remember that this is still viable for 26 and they need to pursue it for 26. Otherwise, they're going to miss it on
Again.
26 and going forward. And I don't see this going away anytime soon. This provides Congress is determined that this program works. It's different than like, well, the WOTC, which is on hiatus right now because Congress can't really get any information and statistical information, whether it makes any real difference at all. This program makes a difference. Back in
Stephan,
93. Yeah, go ahead.
How long does it take you to figure out if we get the application and everything, to figure out, hey, they did file for 22, but not the other years? Is that?
We'll know right away because that's
Yeah.
why we asked for the tax returns.
So that's why I would just tell them, let's get you signed up and they'll figure out if you've got any coming or not.
Get us your 22, 23, 24 returns. We'll determine if you got it for 22, but not for 23, 24, 25.
Yeah, that way you don't have to.
That's likely what happened is they pursued it for 20, maybe they pursued it for 2 or 3 years and then they dropped the ball in 23.
Yeah.
They never pursued it in 23 going forward.
Denise.
The problem hasn't solved. It hasn't been solved because they think it's a one-time deal. They got a bunch of money back and they don't have to pursue this every year. Yes, they have to pursue it every year.
Yeah.
They're going to
Which
drop
is
the
a
ball
nice
next year.
Nice deal for all of us because every year when we redo it again.
Yeah, so I'm very interested. I would love to come up with a way to monetize this. And I've had conversations with reps saying, how do we monetize this going forward? How do we make it residual? Well, problem with making it residual is you kind of have to let the client make the same mistake all over again and hit them up another 3 years from now. Because they're likely to resist paying you 25% to do it for 1 year.
Right.
So I'm interested in monetizing this. What happens more often is the client says, wow, I got back $200,000. I am totally disillusioned with my professional. Will you do the tax returns from now on? Sure. That's what happens more often than not.
Yeah. So I've got a couple ideas on how we could monetize that, Stephan.
Sure.
We can talk about.
Yeah, I would be interested in
later.
hearing ideas of how we can. I've yet to come up with a solid plan of how to get paid, to have enough to pay you guys
Yep.
if we're doing it, on an ongoing basis. So I'm interested in that.
Yeah. So we should, if we can talk a little later, I'll be glad to tell you.
Yeah.
Denise.
Yeah, real quick. I was perusing the page and found the incoming traffic log, and I have no idea what in the devil that's. Should I even bother with it? What is it?
So incoming traffic is anyone who you've sent to the landing page.
Okay.
So think of as incoming traffic as somebody hit the landing page. So leads are someone that filled out the survey.
Okay. So but that
incoming
doesn't give
traffic,
me
you send them in
anywhere.
your link and then they clicked on it.
All you're really
that's when it's
seeing
gonna
is
show
like
up.
they clicked on the landing page. You'll see their IP address. Somebody hit the landing page. Because of the requirements for privacy, we can't really, even there are a software that can tell who hit your landing page, but that's a little scary stuff.
Yeah, no.
Just knowing that information is actually out there, but we're not going to report that because that's some scary stuff.
Sure. No, I understand. Okay.
Thank
So that
you,
just
Denise.
means that somebody visited it, but
Yeah.
I will, but in the leads,
Yeah, the
it'll
technology
give
is
me ones
actually
that
out there where they
completed.
can take the IP address and figure out whose IP address that is. That's some scary stuff.
So a recommendation for everybody is once you send them the link, if you don't see them in your lead page within a couple of days, I would contact them again and say, hey, did you fill this out?
Yeah, I noticed you hit my landing page, but doesn't look like you filled out a survey. Is there a
Yeah,
question I can answer for you?
yeah. Jerry?
Yeah, my son used to work for the NSA. He tells me whose landing page it was.
Yeah, like I said, it's available.
Was that your only
There's some
question?
scary stuff out there.
No, so speaking of the other services you offer or the other things that are coming, I assume that there's revenue for us on those.
Absolutely.
Yeah, we talked about that.
Yeah, there
Okay,
is.
but this is
And
the best place to start because this is a low-lying fruit.
And it's a way to get significant money back for somebody.
Right.
And
and
then,
for you,
you want that, what else you got?
yeah. Yeah, this is I mean, Stefan, I think I'm right on this, but this has got to be the biggest revenue machine for the reps. I mean, they're not gonna make more
Well,
money than
look at,
this.
compare this to some of the money you got back for ERTC. I
Oh,
mean, I
they're
don't know who you were
embarrassing.
working with, but the payout on this is pretty decent compared.
So, George and I, my partner, we got a call today from one of our guys. We've been waiting on him to get his ERC money. He got back $2 million in the
Right?
mail today. So, we look at what we made on that and what we would have made on this if that was,
Yeah.
what you're getting back for somebody.
Yep.
This is 5 or 6, 7 times what we were going
Yeah.
to get paid. I mean,
I know. And
it's an
and
amazing amount. So,
it's the gold rush. So get in on this
yeah,
earlier, because the longer this is out there, the more the fencing companies are going to jump on it, because it's the new shiny penny.
yeah. And when we, hopefully we're not at that point, but when you do get to that point where there's all these other people they're having mass phone calls and emails and all kinds of stuff bombarding these restaurant owners, the thing they need to be aware of is these are all the Johnny come latelys that just want to jump in and
Yep.
they're going to try
Yep.
to cut a
Yep.
fat hog and
Yep.
then they're going to be gone.
Yep. Yeah, they're the
Stefan's been
FinCEN
doing,
companies. That's the new shiny penny. They're going
yeah,
after this right now. This is not the last thing we're going to pursue. We're
right.
going to, after this is over, we're going to be talking to you about 125 plan, group health, WOTC,
Cost
other
seg,
state tax credit programs. This is not the last thing we're going to be
yeah.
talking to you about. That's the big difference between us. And that's why you're paying us 5 points more than everybody else.
Well, and you're also paying more because you've been filing this since 2003. This isn't new to you. This
Yeah,
is
yeah.
something that you're an
None of the
expert at.
credit programs are new to us. This is
Yeah,
what we do.
yeah,
We
you're
do
an
it not
expert at
only
this.
for our own existing clients, but we do it for other sales organizations. This is what we do.
Yeah.
So, I
Yeah,
mean,
so
yeah,
you guys need to make sure you understand that. So if it does come up, if somebody says, well, so and so's charging this amount,
yeah,
well,
sure.
there's a couple of things. Ours includes the amended returns, which did you do the amended returns included in your ERC
Oh, yeah.
fees as well?
All the 941s, you bet.
So nobody else did that. Everybody else said, get with your CPA once we
Yeah,
file
yeah.
this,
Here's what you need to do.
and
It's up to
and
you to
you're going to be
solve
out
it.
of pocket to pay your CPA to take care of this part of this,
Right. And they were charging them money to do the work.
yeah,
Yeah, we're
exactly.
going to charge you $2,500. We'll do the analysis, and then we're going to give you
Yeah,
the numbers you should put on a 941.
yeah.
Okay.
Yeah, so there's hidden things that we're doing that other people aren't, which is the amended doing all that work for them. The other thing is they are again getting the brain surgeon instead of the family doctor.
Oh, here's the other big thing you're not understanding that's behind the scenes too. So there's a reason why we asked them for an 8821. We want to know that when they got their money. So, and we want to be able to follow this through. I haven't yet
Yeah,
to see anybody else that's asking for the power of attorney to follow and track the process.
yeah. There could have been a couple that did that, but
Yeah,
they weren't doing that on the reps' behalf. They were they were
no,
just interested for themselves. They're
yeah. So we want to be able to
yeah,
track this. We want to know when they get paid.
yeah.
So we
Well, the
can,
beauty of this is the electronic filing and getting the bifurcated payout
yeah,
and all that. It's,
yep, yep.
six to
That is
12 weeks. Somebody asked, how long does it take? 6 to 12
Yeah,
weeks.
6 to 12 weeks is a typical, but what I can't control is so we file the return, we get an acceptance within a couple of days, typically the day after. So we know it's in the system, but what we can't control is what human being gets assigned to the case, and what does their desk look like?
And processes it, yeah.
Yeah, what's their desk look like?
So you've got you're going to have people that are oh boy, I just went blank. While I'm trying to remember what I was saying, how long did you want to go, Stefan? I know your time's valuable, so
I can go a little bit longer. I've got something
okay,
coming up here soon.
okay. But yeah, when they file this, the big deal is get the information from, make sure you're in the portal, you're getting that information.
Yeah.
And then once you have that, Stefan, it's filed within a couple of days, right? 2, 3 days?
We can get it done. We can typically get the return done within a week of once. So we won't start
Okay,
on a return, just like we don't do for any other client. Personal tax returns, business tax returns, we won't start on a return until we feel like we have 90% of what we're asking for.
right.
Otherwise, we're doing that return multiple times.
Yeah,
It's just very inefficient.
yeah,
So we're monitoring, monitoring, monitoring. When we think we've got 90%, we're going to start.
yeah. So if they get everything into you in 3 days, then it's going to be
Yeah. So
within the
some
week,
people are
it's going to
like,
be filed and they're
Some
going
people
to
are
have
like,
money.
I'll have this to you this weekend. Like,
Yeah,
okay, great.
yep,
This is just like ERTC. This is the hardest part. And the
yep,
more you can help with that process and staying on top of it and being in the portal and looking at those under review, to client. When you see to client, that's something that's not done. If you see it
yeah,
under review, that means it's something that we're trying to determine, did we get everything we asked for? And if we didn't get everything we asked for, then we leave a comment which goes back out by email to the client and we put it back to review. And when it's back to review, it's bugging them every 3 days.
yep. And you should be bugging them every couple of days too, besides the email,
Yeah, yeah. The best thing you can do is keep in the portals, and then once you have access to a portal, you can go and you can flip between them. You can go,
Yeah,
I've got 20 different clients that I'm monitoring right now. You can flip through them and see where the status is on each one and say, hey, make yourself a little note. I noticed that you're still of the 8 steps, you've got 3 left. What can I do to help you?
yeah.
But
And
understand this is not going to get done until we get all the
yeah,
pieces.
it's a great idea if they have, a right-hand person that you can get
And
an email.
understand, we can add that right-hand person to the portal as well. I've
Yeah,
had, here's my
yeah,
manager. I want to add my manager on. I'll
yeah. A
usually
lot of
ask
times
them
if you
on the
just have
interview.
the owner
Yeah,
gets sidetracked and
yeah,
they have a lot of things going and
yep. And I
they don't
usually
always
ask them on the
remember
interview, is there anybody else we should be adding to the portal? Somebody that has access to the information.
that can
I
help
can
us.
add them on just like
Yeah,
I do the rep.
yeah. All right. Anybody else have a question? I think we might have got them all. Bars and lounges are good. Somebody asked in the chat. So it works just like it does with the restaurants, the tipped employees. And somebody asked about the minimum wage deal again, like in California. Stefan, I mean, if I say it wrong, I guess, or I should let you say it maybe, but if they're over $5.15, it doesn't make any difference what the minimum wage
It
in the
doesn't.
state
So
is.
here's what in those states, there's 6 states that don't follow the minimum wage rate, which means that they have to put more of their tips towards the minimum wage before it's considered a tip. Okay, that's the big difference between the two. So, but if they
And
tell you I pay 17.50 an hour and my tips on a weekly basis are X, just put 5.15 in there because anything more than
yeah,
5.15 doesn't make any difference. So
yeah,
now the important part becomes how many tipped employees do you have and what is their average weekly tips? The fact that they're not a minimum wage state doesn't make any difference as long as you're
right.
getting accurate information on what is
Yeah.
the amount that's considered a tip.
I think that what part of the confusion is people are not understanding 5.15 is the minimum wage for
It
this
is the
program.
it is the minimum wage
So
for
if
this
they're making
program.
more
That's
than
correct.
5.15, doesn't matter if their minimum wage is $8 or
Yeah,
$17.
yeah.
If they're
Whatever their
over
minimum wage
5.15,
is,
we're good.
that's right. Whatever their minimum wage is for the state doesn't make any difference unless they're one of the states that does not follow the minimum wage rate, which just means in that state, more of the tips go toward meeting the minimum wage rate in
Yeah, if
that
they're
state.
213, it has to make it up to 515. So
That's right.
the tips have to
No,
go
not to 515. So they're going to give up more to meet the minimum wage rate in that state. So in
Oh, I
those
see.
states, you should
Yeah.
probably focus on businesses that have a higher employee count because you're going to lose some to the minimum wage rate in that state.
If they aren't making the minimum
Yeah, the
wage.
rest of the states, all we have to hit is 515 an hour.
Yeah. Okay. Karen, you might be the last one.
Oh, great. Thank you. Yeah, just for the record, can you review, please, the weekly Zoom calls? We have Wednesday and Friday and what they're
Yeah,
for.
Friday's new. We're going to start doing Fridays. And the intention is Wednesday is where you invite your brand new clients. So we want to have
Agents,
reps.
right?
Yeah,
Consultants.
so yeah, because I don't what I don't want to do on a Wednesday, I would prefer to spend more detailed time on explaining the program and how it works and not try to hit it at a faster pace, spend more time on that. And then the Fridays are more of the training.
Q&A and all that.
Yeah, so the Wednesday being where you bring your client. And
All right.
understand we're going to spend more time going into the details about the program and not anything about the payout and everything else.
Yeah.
So Wednesdays for consultants or potential clients for the program?
Well, if you're, I
Consultants.
mean, yeah, so, well, I mean, Stan, you on? I would love to get to I would
You
love
might
to
have
get
lost Dan.
yeah, I would, I'd like to have like three different versions. One that you can bring a client to, where we're not going to talk about compensation at all. One where, you're bringing other reps.
Yeah.
And we're talking about the program to make them familiar with the program and how they get paid and what they get paid. And then we have the training one that's all about how do you market, how do you navigate everything, where do you go find this? That's what I'd like to get to. So
Yeah.
right now the Wednesday is more bring a rep,
Your
not a
new people.
client.
Yeah.
But
Maybe we can eventually just have one for an open deal for if you want to have one for some clients that have questions or want more
yeah,
rather
usually, I
than just
mean,
the
right now
one-on-one.
what's happening is the clients are, you're explaining the program to them and they're going on a landing page and they're soothing themselves.
Yeah.
That was what I built the landing page for, is there's every bit of information that a client could possibly need to make a decision and make sure they have plenty of calls to action.
Yeah. Okay. Any last thing you want to add, Stefan?
Nope, I think that's it.
And we appreciate everybody's time. We had a pretty good number that hung on for most of the time. So make sure you share this with, the link, be the same link next Friday and share it with your people. You get your new people on Wednesdays, but once they've got indoctrinated a little bit, get them on these Friday calls so they can, get answers and have an opportunity to talk to Stefan and get Stefan and get this stuff.
And we'll have the recording available soon, correct, Kurt?
Yeah, yeah, I'll do the recording and we'll uh Stefan, if I give you guys the link to the recording, you guys can email that out to everybody, right?
Yeah, send it to Stan, let him
Yeah, I'll
disseminate
do
it.
it. I'll do that. Sounds good. Thank you guys, everybody. Appreciate your time and thank you for being on here with us. Stefan, we really appreciate your time and
You're
uh,
welcome.
I'll you want me to email you what I'm thinking on the
Yeah, I would
monetizing?
love to hear ideas about how to
Okay.
monetize that going forward. I just haven't been able to come up with anything other than just let the client make the same mistake all over again.
Yeah, and then get
It's
them in
just
four
hard to
years.
justify that 25% fee,
Yeah.
without finding money that,
Some of them might like that because they get a big chunk all at once instead of,
it would probably be something like charge a decent fee to
yeah,
find this for you every year and do the math. But,
yeah,
it's like, how do you get past? I mean, if they're keeping the same CPA or they're keeping the same person, to me, that's just a shame.
ludicrous. Yeah,
Your person literally is making the same mistake every year.
yeah, yeah. They're not going to learn from what you did to fix
And,
their
and
problem.
you can only imagine if they're missing this, what else are they missing?
Yeah.
So we're gonna, going forward, we're gonna have tax planning for you. We're gonna, do they own a commercial building? Are you missing out on cost seg?
Yeah, which is big, it could be some big money.
Huge. It can be huge.
Yeah. All right. Appreciate everybody. We'll see you next Friday. Take care.
Bye.
That was some good Zoom.